As demand for takeaway meals soared during Europe's COVID-19 lockdowns, delivery riders with branded backpacks have become a common sight in towns and cities. Since launching in London in 2013, Deliveroo now operates in 54 cities across 13 different countries. But Deliveroo's stock flotation has given some investors indigestion and filled many of these riders with indignation.
Often I'll go out in peak times, Thursday night, Friday night, and I might be waiting 40 minutes for a job. When that job comes through, it might be £3.50, something like that, and I might not get another bite for another hour. So 2 hours work, I've earned £3.50 or £7 in what should be peak times. So it's not sustainable.
These striking riders are just a few hundred among the 50,000 riders that work for Deliveroo in the UK, but coming just a few weeks after the UK Supreme Court ordered the ride-hailing app Uber to treat its drivers as workers. The message about rights and conditions in the so-called gig economy is having an impact at a corporate level. This demonstration by Deliveroo riders is far more than just a symbolic gesture. The buoyancy of the share price among retail investors has not been shared with institutional investors, many of whom are still concerned about the model of the gig economy industry.
These riders are here today to demand better pay, better rights and better safety. They've worked throughout the pandemic, they've literally put their lives on the line while they've seen their company business boom. Yet they've seen pay and conditions get worse and worse throughout the pandemic. After planning to launch at 460 pence per share, Deliveroo floated last week at 390 pence and immediately dropped even further to 280 pence. That's still a valuation of more than $6 billion, but several big-name institutional investors have decided to steer clear.
Investors are demanding a higher standard for workers, particularly in gig economy style practices. Really, in terms of the exact extent of what this is going to mean for companies, is really hard to predict.
The indications are that Deliveroo's so-called retail investors have chosen to hang on to the stock instead of dumping it, and the share price rose by a modest 2% in early trading on Wednesday. Deliveroo hasn't yet published financial results for 2020, and the apparent boom in the delivery business during the pandemic year could well bounce the share price back up. But the workers who made that possible are demanding their share of the success. Paul Brennan, Al Jazeera, Shoreditch, East London.